In this video, I'm going to lay out my crypto market thesis for 2022. I'm going to be discussing Bitcoin, Ethereum, NFTs, DeFi, and regulations. And then at the end of the video, I'm going to show you my current portfolio allocations and my plan for moving into the new year. So let's talk first about Bitcoin, which has a dominant effect on the market. There's three theories that I think we should consider here. The first is Benjamin Cohen's lengthening cycle theory, which hypothesizes that Bitcoin is going to still follow a market cycle, although that won't be interlinked to the halving events that happen every 4 years anymore. The cycles are essentially going to extend, so we have a lengthened bull market drawn out over a number of years. The second theory, which I first heard of Su Zhu of 3 Arrows Capital, but I think Dan Helder came up with it first, is that of super cycles. And what this means is that Bitcoin is just almost going to go up only in an Amazon-esque type of fashion. It might even form a range trending upwards over a long period of time. The third theory, which I've heard thrown about on crypto Twitter, is that we've hit a market cycle top already. We've got this double top pattern played out, and the market's going to go downhill from here. And we're now moving into a bearish stage for the 4-year cycle. I think if we look at a high time frame log chart for the Bitcoin US dollar pair, this is the weekly. There's an argument to be made that we could be mid-cycle here and there's more upside potentially for 2022. Bear in mind that I, like most market participants, have a bullish bias for cryptocurrency markets. One area of contention is whether we'll see a blow-off top in 2022. I think this is somewhat unlikely because there's so many people planning to sell into a blow-off top, it almost negates the possibility of that actually happening. If people are planning on scaling out, they're going to add selling pressure as the price goes up. One news event which might happen if we get there would be Bitcoin exceeding $100,000. If this happens, I think that's going to be a mainstream news event. It's going to gain a lot of public attention, and we might see the market accelerate from there over the coming months. If Bitcoin and the overall crypto markets continue to appreciate into 2022, I think there's a good chance that Ethereum will outperform Bitcoin. We've seen it go from 0.03 to 0.08 already this year. And if this continues to get to a level around 0.15, then that's going to be the area where we're going to see a flipping in, where the market cap of Ethereum is greater than that of Bitcoin. This again would be a major newsworthy event, which is going to make Ethereum a household name and drive a lot of interest to that protocol. If this is going to take place, then I think May, June time, when the merge takes place, that will be the catalyst. Ethereum is going to transition to Ethereum 2.0 and from a proof of work algorithm to a proof of stake algorithm. There's many pros and cons of this, but from a market's perspective, there's a few things we need to take into account. One is that it's going to gain a lot of attention, and that should increase demand, particularly from institutional investors who may see the staking mechanism as something they can relate to as a revenue generating asset. On the negative side is roughly $35 billion of Ether, which is locked inside the Ethereum 2.0 smart contract. And this was staked largely at a time when Ethereum was at a much lower price. It's appreciated from around $100 when this was first released up to $4,000. And I think a lot of that money, there might be some people that want to take some of them gains when them tokens become unlocked. The other thing we need to consider is the increasing competitiveness for ulterior layer 1s and layer 2s, which are being released this year. Ethereum's TVL has dropped from 98% at the beginning of 2021 down to 67% now. We're also seeing the emergence of layer 2s as well, with Arbitrum being the main player at the moment. The ZK Sync's being released this year, and I think if they release their own token and they incentivize development and yield farming on that ecosystem, then it could draw a lot of that TVL back to Ethereum. It's hard to talk about Ethereum without complaining about the gas cost, and these have reached excessive levels this year. To deploy a smart contract now, it can cost a couple of $1,000s. A transaction on Uniswap can cost $50 to $200. And it's become almost unusable for the masses. The network has become a victim of its own success, and this is what has pushed TVL to other chains. I think there's a case to be made that Ethereum will eventually become a chain of proofs and it will be used mainly programmatically rather than by end users. An interesting question could be raised as to whether Ethereum provides enough security for these layer 2s to justify the transaction fees. Starkware, another ZK rollup, has already suggested they don't intend to prove their transactions on the Ethereum layer 1 forever. And that really raises the question as to who can afford to pay the transaction fees on this network if the price of Ethereum keeps going up. Having said that, Ethereum is constantly evolving. It's bringing up new use cases all the time. It has some of the brightest minds in the industry working and developing and building on the Ethereum network. The next big talking point I think we're going to see in 2022 is regulation. We've got the stereotypical bad guy in Gary Gensler and the SEC taking on some of the cryptocurrency exchanges and DeFi protocols in the space. I think the case against Luna's mirror protocol is going to be interesting to see how that plays out. I think they're going to go after the low-hanging fruit of the industry. I think the more decentralized a protocol is, the less chance it's going to gain the attention of the SEC. One positive bit of news flow I think we'll see coming out of the regulators next year is a spot ETF. We already have a futures ETF, but a spot ETF will be much more compelling for traditional finance investors. I also think we'll see Grayscale convert their GBTC product over to a spot ETF once this happens. Now let's talk a little bit about NFTs and the Metaverse. Both have gone from strength to strength this year, and I can see that continuing. However, at some point, the illiquid nature of non-fungible tokens, I think is going to come into play, and there's going to be a deep bear market. When this happens, I think a lot of the lower value tokens are essentially going to go to zero. There's just not going to be a marketplace or a buyer for those non-fungible tokens. If you can't find anyone that specifically likes JPEG, then there's no buyer, and the value essentially is worthless. Having said that, I think that if this does happen, it's going to be a flight to quality. And things like the CryptoPunks, Beeples, Bored Ape Yacht Club, the really high value blue chip NFTs will always hold some value. And it could provide a really great buying opportunity if the market does capitulate and there's a rush to the exits. I have a friend that works in enterprise development, and they're getting a huge amount of interest from corporate entities in the NFT space. A lot of them are looking at it as a promotional activity, and they just want to get involved and be part of the attention that's flowed around the NFT space right now. In Q4 2021, we had Mark Zuckerberg announce the change of the corporate name from Facebook to Meta, and the vision of the company is really focused around building this metaverse product. I would love to believe that we're going to see an open standard for a multiverse, and there's going to be all sorts of open source projects building an open, transparent, neutral, decentralized metaverse. But I think there's a real risk that Zuckerberg runs away with it. They're well positioned in that they've got the hardware, the development teams, almost unlimited resources to take this on. It's a huge challenge. It requires a lot of software development. I think for developers, there's actually an opportunity in getting involved and starting to build in things for the metaverse. I think there could be a gold mine rush, almost like there was 15 years ago for applications to run on top of Android, iOS, and Facebook. My hope is that we end up with a choice between Meta and an open Meta alternative, similar to how we have Apple and Android today. DeFi's had a relatively quiet close to the year, but it's an area where I'm going to be investing heavily in 2022. There's a few areas where I'm actively looking for new projects. One is for a market leader in cross-chain bridges. It would be nice to be able to move native assets across different chains very easily. I think as soon as someone nails that user experience and they scale it out across different chains and assets to get a first mover advantage, I think that's going to be a really compelling product, something that could generate revenue for a long time to come. The other thing I'm looking out for is a DeFi trading platform. There's a lot of projects that are kind of trying to build the next FTX on DeFi, and I don't know how that's working out in terms of traction. It seems like a central order book isn't well fitted, and it might be better to kind of come up with something completely new where you're centralizing a lot of liquidity from different areas and providing a leveraged trading platform on top of that. Options trading volumes are growing across the industry, both on centralized exchanges such as Deribit and on DeFi protocols. There's now 9 different options protocols where you can buy exposure to digital assets. I think we're going to see a lot of retail day traders move across to trading options next year. And I think that's going to open up a lot of opportunities within the DeFi space to build vaults for things like covered calls and what Ribbon Finance is doing, where you can generate revenue on almost like a yield farming strategy within a smart contract. The curve was rage on, and I think there's no reason to believe that this will discontinue in 2022. There's going to be more sophisticated investors coming into the space, and they're going to be looking for the safest place for their money, and that currently is Curve. So given this market thesis, how am I allocating my capital going into the new year? Well, this is my current portfolio of digital assets. This doesn't include stablecoins. I still have a non-insignificant amount of my net worth in yield-bearing stablecoins, which I haven't included in these percentages. As you can see, my highest allocation is currently to Ethereum. I can see this flipping back to Bitcoin at some point this year as I risk off maybe going into the merge. I also have some exchange tokens in FTT and BNB, and I'm still very bullish on any kind of project which is generating real revenues to support their token. Binance and FTX are both private listed companies, and if they go public in the next year, then there's some upside there due to the attention that's going to bring to the exchanges. I also have some decentralized exchanges in Uniswap and SushiSwap, and some DeFi governance tokens, which I hold because I'm bullish on them as projects individually. Over the next year, we're trying to stay ahead of the money flow by exploring different technologies and ecosystems as they open up, such as the ZK rollup layer 2s on Ethereum. I'll also be buying into any liquidation cascades, as full selling on a high time frame is almost always a good trade. And if we see a wider sell-off and capitulation across the markets, then I'm in a good position to allocate capital to more high-risk assets when I see fit. I think the expansion of crypto markets presents the biggest financial opportunity that I've ever seen, and I'm going to be giving it my full attention in 2022. I'm going to be experimenting, building and learning and sharing what I've learned on this channel. So subscribe for updates, hit the like button for the YouTube algorithm, and thank you for watching.